Hey, what's going on, guys? Welcome back to Real Estate Playbook. My name's Andrew, and today we're going to jump right into what it means to lock your interest rate. Now, from a timeline perspective, when you lock your interest rate, this is something you're going to do after you have placed an offer on a home, you've won the offer, and now sometime between when you win the offer and when you close on your home, you're going to have to lock your interest rate. And this is important to know because just like the stock market changes every day, so do mortgage interest rates because they're inside of the market, right? It's being based off of the mortgage-backed securities. So just like the stock market changes, so are the mortgage interest rates. So as a consumer, you want to understand what it means to lock your interest rate because this could be the difference between, you getting higher or lower rates or just kind of depending where the market is. But at some point you will lock your rate before you close. And when you're locking your rate, guys, I just wanted you to know that you do have options. And the way you look at those options can be kind of looked at kind of like a number line. And when you're looking at interest rates, you're going to have a scenario of rates that are presented to you based off of your scenario, right? So based off your credit score, your down payment, your loan to value, the specific loan program you're using, maybe you're a first-time home buyer. There's so many different factors that go into what your rate set will be. But essentially, you're going to have a scenario of different rates that are available to you. And you're going to have something presented to you called the par interest rate. Now, when you're talking to a bank, the loan officer is probably say, hey, we've got a par interest rate of such and such. And I want you to know that the par interest rate, if you're looking at this like a number line, that could be seen as zero or the break even. And the par interest rate is when you pay nothing for an interest rate. Means you're taking the market interest rate, whatever the market rate is for that day, for that specific program and for your scenario, that's what it costs. It costs nothing. Because guys, no matter what interest rate you take, interest rates do cost something. They're not free unless you're taking the market rate. And that's just something you want to know. Interest rates cost something. And in terms of what it's going to cost you, it just depends on whether you want to receive money or do you want to pay money to have that interest rate. So as you move to the right here of the number line, right, if we're at 7.125, let's just say is the par interest rate. As you move right and left, the interest rates are going to go up and down in 1/8%. So it's going to go from 7.125 to 7.25 to 7.375 to 7.5. And it's going to be the same way going down. So interest rates move at 1/8 bracket. You can go up or down 1/8% going either way. Now, as you're going up, if you take an interest rate that's higher than the par rate, higher than what the market is predicting or giving you that day, you're going to receive money, right? I've got this green here because you are going to receive money from the bank. And I did a horrible job drawing this bank here, so please forgive me in the comments. But this is your bank, and this is the par rate. And if you take a rate that's higher than the par rate, the bank is going to give you money. The bank is going to give you money because you're taking a rate higher than what this is. So this is money that you can use for closing costs, right? Maybe it's the bank fees, the third party fees, your prepaid expenses, anything in that closing cost bucket, you can use this money for that. And some people would say, Andrew, why the heck would I take a higher rate than the par rate? Why would I want to do that? Well, maybe on your scenario, you need some extra money to pay for those closing costs, right? You may not have the funds available to bring in outside money for closing costs. So you may take a higher rate to pay for those fees that are associated with getting a loan. So when just big point here, when you're taking a rate higher than the par rate, that middle rate, you are going to get money. The bank is going to give you money. The bank's going to give you money. Now, the same or the opposite can be true when you're moving to the left of the number line. So as you move down the interest rates, right, you move into the left of the number line. Now we're taking a lesser interest rate of the par rate. So now you are going to pay for that lower rate because it's lower than what the market is. Now, whether you're paying for this out of your pocket or you're receiving seller concessions from the individual selling the home, that's irrelevant in terms of who's paying for it, but somebody is going to be paying to have that lower rate. So now you are going to be paying money to the bank because you're taking a lower interest rate. The market rate is here. You're taking something lower than that. So now you are going to pay the bank. Now, in regards to how much is that going to cost, that's going to depend each day on the pricing for those specific loan programs. And again, your scenario. And the pricing also depends as well on what your loan amount is. And it also depends on terms of how the company, the mortgage broker, the bank, who's ever helping you with your loan, depends how they are pricing their interest rates. So, in terms of how much it's going to cost, that's going to vary. But you just need to know that if you take an interest rate lesser than the market value, you're going to pay for a rate. If you take an interest rate that's higher than the market value, you are going to pay for this. And this is what's referred to as origination points or credits. So if someone says, hey, you're going to pay an origination cost of 1% to have that rate, basically that means you're paying 1% of the loan amount to, get down to a lower rate. You're going 1% of the rate bracket. So I know it's a lot of terminology and it can be a little confusing as a consumer, just when this is all being thrown at you, especially when you're under you're under contract on the home. But just inquire about this. Hey, what's the par interest rate? How much would it cost to buy the rate down by an eighth or a quarter or 3/8 of a percent? You can just ask and they can let you know how much it would cost. And then you can kind of, feel out the situation with, do you have extra money that you want to use to buy the rate down? Do you have seller concessions coming in to pay the rate down? What do you need for your scenario? And then the same thing can be true for taking a higher value. So, how much money would I receive if I take an eighth higher, a quarter higher, 3/8 higher? And you can figure out that math because maybe you do want to have some money to pay for those closing costs and then it's not coming out of your own pocket directly. So just a few things to consider because you do have options. And I know interest rates are thrown around everywhere in the mortgage space because, right, you're borrowing money. But I just want to give you some education here and hopefully some value to help you with your decision so that when this time comes, when you're, nearing that finish line of your home purchase, you're able to make an educated decision. So I hope this brought value to you guys. My goal here at the Real Estate Playbook is just to give you information and tools to help you with your real estate journey here and just help you out so you can navigate this path here and be confident to execute and win, in your experience here. So just like in sports, if you have a playbook to be successful, whether on the offense or defensive side of the ball, you'd want to have a playbook in your real estate life as well so you can be successful. I don't want you guys to go into this situation just winging it. I want you to be prepared so that you can go out there, win, and be confident in this investment because it's an exciting time and it's also a huge step forward in your financial stability. So just want to give you value and hopefully help somebody out there today with this scenario. So if you need anything, guys, feel free to, ask questions in the comments or email yourrealestateplaybook@gmail.com. I'm happy to, help and assist in any way possible. But besides that, thanks for watching. Have a blessed rest of your day.